In this session, we will be solving a question on preparation of final accounts in the case of single entry system. And together, let's look at the question. The question goes like this. Mr. ABC is a small trader maintaining his books of accounts using single entry system. He has given the following details, and they have given us the details of his assets and his liabilities. They have prepared that in a tabular form, and his additional capital invested was 3,000 in cash and 1,000 in the form of furniture into the business. He has transferred his business. He has transferred from his business account rupees 500 per month to his personal and used goods worth rupees 750 for household purpose. So basically here we are talking about drawings. Depreciate machinery by 15% per annum and furniture by 10% per annum. Provide for rent due rupees 1,000. Prepare a statement of uh, profit and loss and revised statement of affairs for the year ending 31st March 2019. So here we are expected to prepare all the three statements. Basically, they have asked us only to prepare the statement of profit and loss and the revised statement of affairs. But we already know that if you have to prepare the statement of profit and loss, you will have to prepare the combined statement of affairs. Then you have to prepare the statement of profit and loss, and eventually you will have to prepare the revised statement of affairs. So that's how we go about with the preparation of final accounts in the case of single entry system. So together, let's discuss this question and then start off with its solve. So the first statement that we will have to prepare over here is the combined statement of affairs in order to estimate the opening and the closing capital. Now, for us to prepare the opening and the closing capital, please remember, we will have to identify which are our assets, which are our liabilities. So let's look at the items given over here. Building, machinery, furniture, debtor, stock. All these five items together, these are your assets. Bank creditors, these items together are your liabilities. So uh, accordingly, we will have to place these items. Now let's look at the adjustment. Remember the thumb rule as per double entry final accounts. Any adjustment, you will have to treat it twice. The same is applicable here as well. His additional capital invested was 3,000 in cash and rupees 1,000 in the form of furniture. So here, 3,000 uh, uh, so 3,000 and 1,000 together, we are talking about an additional capital of 4,000 rupees. He has transferred from his account rupees 500 per month to his personal accounts and used 750 for household. Here we are talking about drawings. So 500 into 12, that is 6,000. So and then along with that, he has taken goods worth 750 as drawings. So altogether, your drawings is 6,750. Depreciate machinery by 15%, furniture by 10%. So this we will have to consider it as a expense. Provide for rent, rupees 1,000. That also we will have to consider this is rent outstanding. Okay, this is rent outstanding. So that also we will have to consider accordingly. So with that note, let us start off with the preparation of the final accounts over here. The very first statement that we will have to prepare is your revised combined statement of affairs. So let's prepare the format for combined statement of affairs. I already have it prepared over here, and let me put in the values here as well. So I have put in the values and building, machinery, furniture, debtor, stock. So these are the assets that we have. Now, the next item that we have to consider on the left hand side are your liabilities. Now, which are the or what are the liabilities that we have? The liabilities that we have are bank and creditors. So let me look into that as well. So bank that has also been uh, that that has also been uh, uh, that has also been mentioned over here. Okay, that has also been taken over here. So there was a quick question over here asking bank was uh, if bank was and bank overdraft. So just give me a quick minute. I'll just clarify that. Just give me a quick minute, dear students. Okay, so dear students, here in this case, bank is actually an asset, so it has to be treated on the asset side. So let's just consider that also. Bank is also an asset, so that has to be treated here. It is not bank overdraft. It is actually cash balance, so that has to be treated on the right side. Then we have creditors, and creditors is the only liability that we have in this question, so that has been treated over here. So we only have one liability, and the remaining all the items are assets. Now let's try and total up. So here, obviously, the asset would be more than the liability side, and we've got that in place. Now we will have, which means the both the sides, the amounts have to be the same. Okay, on both the sides the amounts have to be the same, and that is what we have done. And let's quickly calculate the balancing figures. Now, what are the balancing figures that we have? The balancing figures that we have are your opening capital. How much is your opening capital? Opening capital, that let's quickly just calculate that. So opening capital, the amount is 25,250. Then the next, uh, the next for the closing values, uh, we will have to take the second year's value, and that we have considered. And let's just quickly calculate that. And the closing capital is 24,850. So opening capital is 25,250, closing capital is 24,850. So with that, we have completed the preparation of combined statement of effects. The next statement that we have to prepare here is the statement of profit and loss. Statement of profit and loss, we start off with the closing capital. Okay, we start off with a closing capital. Closing capital is 24,850. It is 24,850. To this, we have to add drawings. So how much is drawings mentioned in the question? Let's just quickly look at the drawings. Now here, please remember, drawings is given as rupees 500 per month. So that so you have to take 500 into 12, because we have 12 months a year, and then we have 750 as well. So in total, the additional capital is 6,750. Okay, it is 6,750. Along with that, we have to sum up the additional capital. Additional capital is 4,000. Okay, additional capital is 4,000. Then next, that what we have to do is we have the adjusted capital. So how much is the adjusted capital? Adjusted capital works out to be 24,850 plus 6,750 minus 4,000. So that works out to be 27,600. Okay, that works out to be 27,600. Now, from this, we have to subtract the opening capital value. Opening capital is 25,250. Okay, opening capital is 25,250. So the gross profit is the difference between the two, and gross profit is 2,350. Okay, the gross profit is 2,350 that we have calculated just now. Now, what we have to do is we have to consider all our expenses, expenses, losses, incomes, and gains. So let's start off with that. Let's start off with the incomes and gains. Now, in this particular question, we do not have any incomes or gains. In this particular question, we do not have any incomes or gains. However, we have expenses and losses. Now, what are the expenses and the losses that we have? Expenses and the losses that we have are depreciation on, we have depreciation on machinery. Okay, we have depreciation on machinery. Depreciation on machinery is charged at 15%. Okay, depreciation on machinery is charged at 15%, and that 15% would be 15% of 7,500. Okay, that will be 15% of 7,500, which works out to be 1,150. Okay, that works out to be 1,150. Then you have depreciation on furniture. So depreciation on furniture, depreciation on furniture, it is calculated at 10%. 10% of what? 10% of 10% of the value of machinery. Now here, 10% on the value of furniture. So here we are in a quite a dilemma because we have two sets of value. We have opening and then we have closing. Which one do we go with? We will have to go with the closing value. We will have to go with the closing value so that we have considered. So when we do all this together, the uh, the collective value that we get uh, is what you call as net profit. Okay, so the resulting value that you get over here is called as net profit, and let's just quickly calculate that. So gross profit minus 1,250 minus 400 together, that works out to be 825. Okay. Oh yes, someone has just pointed out there was one more item that I missed out. My mistake. I have to calculate I have not included the outstanding rent. So outstanding rent also needs to be included. Outstanding rent is a expense. Okay? So outstanding rent is an expense, and the amount is 1,000. Okay. So collectively, when we take all this, I think we should be getting a loss, but nonetheless, we will just confirm in some time. So yes, we are getting a loss, and the loss is 175. Okay, the loss is 175. Now let's go about with the preparation of the uh, let's go about with the preparation of the revised statement of affairs. Now, for us to prepare the revised statement of affairs, we will have to start off with the opening capital. How much is the opening capital? Opening capital is 25,250. Okay, the opening capital is 25,250. Uh, so let's just make a note of that. Okay, so I had to correct that. So we are having net loss, and so that has been included. Now we have additional capital. How much is additional capital? Additional capital is 4,000. So additional capital has been brought in. We do not have interest on capital. We do not have interest on additional capital. Now, according to the format says add net profit. But here, since we have loss, we will be subtracting the net loss. So net loss is 175. Okay, net loss is 175, and then we have to subtract drawings. How much is drawings? Drawings is 6,750. Okay, drawings is 6,750. So that has been brought in, and so there's a small change here because okay, so interest on drawings, that also we do not have. So let's just go about calculating this. So to the opening capital, you will be adding additional capital, subtracting the net loss. Okay, we will be subtracting the net loss, and then we will also have to be subtracting the drawings. Together, what we will be getting is the revised closing capital. So how much is the revising closing capital? Revised closing capital is 22,325. Now let's consider the other items. What are the other items that we have? The other liability items that we have here are creditors. And how much is creditors? Creditors is 7,000. Okay. Creditors is 7,000. Okay, so creditors is 7,000. So that has been considered. Now let's move on to the asset side. Now, what are the items that we have as asset? We have building. Okay, building is 12,000. Building, the amount is 12,500. So, but for building, we do not have any adjustments, so we can take the amount as it is. Then we have machinery, and there is depreciation on machinery. Depreciation on machinery is 7,500, and the depreciation amount we will have to subtract. So less depreciation, and depreciation amount on machinery is 1,125. Okay, so it's 1,125. So that has been subtracted, and let's quickly calculate the net value of machinery. Net value of machinery is 6,375. Then you have furniture, and then furniture, the value is furniture's value uh, is 4,000. Please remember, we are going with the closing values. From this, we will have to subtract the depreciation. Depreciation is 400. So when you do so, you get the net amount to be 3,600. Then you have debtors, and then debtors, and then you have stock. So debtors, the amount is 4,000. Stock is 3,500. So that we have considered over here. Then we also have to consider bank, and bank we know is 350. So let's consider that as well. Okay, so 350. Just make a correction here. And now what we have to do is we will have to total up the debit side with the credit side. Now, if you notice, in my case, it is not tallying. That's the reason being I have missed out on one item. And the item that I've missed out over here is rent outstanding. Remember, rent outstanding is a liability. Rent outstanding is a liability. So I've considered that. And now what has happened is that my liability is equal to the assets. Okay, my liability is equal to the asset.